In her Budget 2022 speech, Finance Minister announced that digital assets, including cryptocurrencies, will be taxable in India. Now, crypto enthusiasts did welcome this move because it does imply that cryptocurrency investing is not illegal, but this happiness was short-lived. That's because FM has decided to tax cryptocurrency at a whopping 30%. Now, this is much higher than what you pay on your income from mutual funds and even on stocks. Also, no deductions, including losses on some transactions, are allowed. While the government intends to track the flow of investment in digital assets, these provisions, according to us, could actually kill trading in this asset class. Now, we at Moneycontrol did some taxation math for you. Suppose in 10 trades, a trader makes a gross profit of 1 lakh rupees and a loss of 50,000 rupees, thus posting a net profit of 50,000. If this was happening in crypto assets, the trader will have to pay a tax of 30,000 at 30% rate on this gross profit, leaving 20,000 as profit on his table. Now, in speculative trading in the equity markets, his tax would be 15,000, which is 30% on the net profit of 50,000 rupees, leaving him with 35,000 rupees. The bigger problem is TDS. On every trade, the trader has to incur a cost of 1% as TDS. In 10 trades, it will be equal to 10% of the money deployed to trade. Normally, a very good short-term trader makes anywhere between 3 to 5% on his capital. Now, assuming an optimistic 10% return on investment, the trader will deploy upwards of 10 lakh per trade to generate a net profit of 50,000 rupees. A TDS of 1% of each trade of 10 lakh each for 10 trades would add up to 1 lakh rupees. In the end, after incurring the taxes mentioned in the budget, the trader would be down by 50,000 rupees and the government would have made anywhere between 1.3 lakh to 1 lakh rupees from TDS and 30,000 from capital gains. So when does this tax on cryptocurrencies come into effect? Well, 1st of April 2022, that's when the tax on virtual digital assets will come into force. Now, I'm sure you're wondering what's the difference between the transfer of a virtual digital asset versus its sale. Cryptocurrencies exchange hands in more than one way. Unlike a normal buy or sell of stocks, mutual fund units, etc., cryptocurrencies are not strictly bought and sold on exchanges. Many times, two people exchange cryptocurrencies through their wallets. For instance, you own a Bitcoin and I own an Ether and we exchange our coins. This is covered within the definition of transfer for tax purposes. The government uses the word transfer to encompass all kinds of transaction. Now remember, when you buy a cryptocurrency, you have to make the payment in cash or some kind of a currency. So suffice to say that the budget aims to tax that as well. Will I be taxed if I simply transfer my own coins between my wallets? The answer is no, it should not be taxed. However, do bear in mind that gifts of virtual digital assets will now be taxable in the hands of the recipient. For instance, if you're gifting your close relative, whether it's your spouse, your kids, etc., that will not be liable to tax. However, while gifting to third parties or persons who are not covered within the definition of relatives, whether it's your extended family or friends, that will be liable to tax. Now, one might ask, if the government is taxing at a 30% rate plus surcharge, what's the need of 1% TDS? Well, the government has introduced the 1% TDS only to keep a tab on who's buying and selling these cryptocurrencies, whether it's NFTs or tokens, etc. So the tax on source will be deducted and then passed on to the government by crypto exchanges. The FM also said no set-offs will be allowed on losses incurred in the transfer of virtual digital assets. The current income tax regime, if you look at it, it allows taxpayers to set off their long-term losses against long-term capital gains, or LTCG as we know it. It exempts taxpayers from paying tax on their long-term gains. However, that won't be possible in case of cryptocurrency income. This means losses or profits cannot be adjusted with any other income or losses in the current financial year, and losses cannot be carried forward to the next fiscal year. We hope you found some more clarity now on how to plan your investment journey in the world of digital assets. Don't forget to share, subscribe, or like this video. Stay tuned to Moneycontrol for similar such updates. Happy investing.